Welcome back to the Crypto World channel, everyone. My name is Josh, and in this video, I'll be discussing this massive Bitcoin crash that happened over this last one day. Now, there was a buildup of reasons why this crash actually happened. As you can see here, Bitcoin actually formed a quick bearish divergence on the chart. I was expecting some downside, but once again, not this much. The reason why we actually saw this much downside on the chart over the last day is because of a liquidity crisis over on the Kraken exchange. I'll go more into depth about that in just a moment, so make sure you're sticking around for that. Also in this video, I'll be looking at the big picture. I'll be zooming out to the daily and the weekly charts to see where we are in this bull run, to see if this was the top or if we're still heading higher, and whether or not you should be using this as a buying opportunity to hold for the long term, as I always say in my videos. I'll also be sure to include Ethereum towards the end of the video as always, so make sure you're sticking around for that as well. And in this video, I'll be showing some exclusive indicators that actually tell you exactly when this Bitcoin bull cycle will top out. All that and more in this video, so make sure you're watching this video all the way through so you're not missing out on any of this valuable information. But yeah, if all of that sounds good to you, then make sure to just leave a like on the video down below, and if you're new to the channel, make sure to subscribe to the channel with notifications turned on. I put a lot of time and effort into these videos, so if you could just spend a couple seconds to click like and subscribe, it seriously helps out the channel so much. But yeah, with all that out of the way, let's get straight into what this video is about. So right here, we're on the Bitcoin 2-hour chart to begin with. And since the top that we had just here at around 58,400 down to the bottom of this wick, Bitcoin fell by nearly 19% within one day. And now that isn't something that we haven't seen before. Yes, this isn't great for Bitcoin, but it isn't out of the ordinary. Bitcoin has done this time and time again. Once again, during the 2017 bull run, we had corrections up to around 40% to the downside, and that was during a bull run. So I'm just going to say straight away, this is your buying opportunity if you haven't already gotten into Bitcoin. Just quickly looking at the RSI on the 2-hour chart, you can see here that it is starting to bottom out, even up to the 4-hour chart. As you can see here, if it loads, the RSI is once again starting to bottom out even on the 4-hour chart. And on the daily chart, it still has a while to go before it bottoms out, but it is getting close to those middle areas in the RSI band, as it did back here when we bottomed out at 30,000. So look, we could totally see some more downside action, and in fact, I would expect to see a little bit more downside action now because of what's happened recently. But in that being said, the biggest drop in this correction is now behind it, in my opinion, from looking at the chart and simply looking at the size of this correction so far. Once again, from top to bottom, we've corrected around 19%, close to that 20% mark. And as I mentioned just earlier, the biggest corrections during a bull market, at least back in 2017, were around 40% to the downside. So just quickly zooming back into the 2-hour chart once again, as you can see here, we formed that bearish divergence that I talked about in my last 2 videos. So obviously in the price, we've got this high and a higher high, but in the RSI, we got a high and a lower high. So once again, that's a bearish divergence, and I was expecting the price to come down a little bit, but I'm going to be completely honest, I was not expecting the price to come down this much. I did not predict this massive crash just here. What basically happened here was this bearish divergence was beginning to play out as I was expecting it to, but as we got around these lower areas, when we started breaking support levels, once again in my last video, I kind of mapped out this bull flag on the chart just here, and I said in my last video that this is a bullish pattern, and yes, this is still a bullish pattern, don't get me wrong, but I also mentioned that every now and again, these patterns can break to the downside, and as you can see, we did break to the downside, and we actually came back up for the retest of that support level, becoming new resistance, and that confirms the breakout to the downside. And as we got to around these areas just here, once again, that was my lowest downside target that I mentioned in my last video, around 53,000. That's when a cascade of liquidations and a liquidity crisis on the Kraken exchange began to kick in. And basically what that actually means is when the order books on an exchange, when the orders are extremely thin, that opens the price up to extremely volatile moves, especially when there's big players trying to trade in the market. Let's just say, for a quick example, between 55,000 and 50,000, let's just say there's only $1 million worth of orders listed in there to buy Bitcoin. If that's the case in that example, if someone comes along and tries to sell $1 million worth of Bitcoin, they're gonna fill all of those buy orders all the way down to that $50,000 level, because there's only $1 million worth of buy orders within that price range. So just going off that explanation, as you can obviously tell now, the less orders that there are within a price range, the easier it is for a big player to move the market. And how the Bitcoin price actually operates is each exchange has their own market price that basically just goes off the order books on that particular exchange. And also that exchange's price that goes off that specific exchange's order book gets combined with a basket of other exchanges to create the mark price for Bitcoin. And this is basically how the price is determined for Bitcoin. It's a basket of exchanges working together. Normally, all of the exchanges in a normal day in crypto, the exchanges should have pretty much the exact same price. So for example, if you go on Coinbase and Bitcoin's $50,000 per Bitcoin, and if you go on Gemini, it should be pretty much exactly $50,000 per Bitcoin over there as well. But what happened here was on one particular exchange, and this exchange happened to be Kraken this time, there was obviously extremely thin order books and a cascade of liquidations that happened on the Kraken exchange. And that basically dragged down the price on the Kraken exchange across a bunch of the top cryptos, not just Bitcoin. And since the other top crypto exchanges used the Kraken exchange within that basket of exchanges to set the price for Bitcoin, that is what basically dragged down the Bitcoin price and a lot of other top cryptos. And I'm about to prove to you that this is actually what happened. Now, this is the Ethereum US dollar chart on the Coinbase exchange. As you can see, Ethereum got down to around 1,500 US dollars at this recent bottom. But if I go over here and I switch this over to the Kraken exchange, the same Ethereum US dollar chart, as you can see here, this wick just here proves exactly what I just said. Ethereum on Kraken didn't just drop down to 1,500 like it did on other exchanges. Over on Kraken, Ethereum dropped down to 700 US dollars per Ethereum. It then came immediately straight back up to 1,700. So obviously this massive wick to the downside is not natural. This is a liquidation event, a thin order book on the Kraken exchange. And once again, this carried over to other exchanges because Kraken's within that basket of exchanges that the other exchanges use to determine the price of cryptos. Another good example is Chainlink. Here's the Chainlink US dollar chart. We're on the 2-hour chart, and this is on the Binance exchange. Chainlink on Binance got as low as about $24.30 down at this low just here on this big wick. Once again, this is on the Binance exchange just here, but if I quickly flick it over to the Kraken exchange, here you go. Over on Kraken, as you can see here, Chainlink formed this massive wick to the downside, and it came all the way down to just $13.10. And then it immediately shot back up in the same 2-hour candle back to $30, from $13 to $30. So once again, that price action is not natural. Now, I think you already get the picture, but I'll quickly show you one last example. Here's the Cardano chart on the 2-hour chart. This is on the Binance exchange. As you can see here, Cardano had this massive wick to the downside on Binance. It came down to about 80 cents. Once again, this is on the Binance exchange, but if I go over here and switch it to the Kraken exchange, as you can see here, we get another monster wick to the downside. Over on the Kraken exchange, Cardano got as low as about 15 cents. So that's right, in the same 2-hour candle, Cardano dropped from about $1 down to 15 cents and straight back to $1, all within the same 2-hour candle. And once again, that is not normal price action whatsoever, even in crypto. So this right here, once again, this basically just happened on Kraken. This carried over to other exchanges, just smaller on other exchanges. And that's essentially the main reason why a lot of the top cryptos and pretty much the whole crypto market just got dragged down over the past one day, simply because of one major issue that happened on just one exchange. But yeah, with that out of the way, let's get into my macro analysis, my longer term analysis on the chart to see whether or not this was the top for Bitcoin. And I'm just about to show you some exclusive indicators that actually times the top for Bitcoin bull markets every time. All right, now we're still on the Bitcoin US dollar chart, but we're on the 1 week chart right now. And as you can see, this is that big crash that everyone's worrying about right now. When you actually zoom out on the charts, this crash is absolutely nothing. Pulling out this indicator on the chart just here, this is actually actually a buy/sell signal on the chart that I've customized myself. And essentially how it works is anytime the price is below this green line, it's a great time to buy for the long term. And anytime the price gets above the red line, it's a great time to sell. And this indicator over the years has worked really well, as you can tell here. This is useful to basically just see where we are within the Bitcoin cycles. And as you can see, we are closer towards the top than we are the bottom, but we're still yet to actually top out. This is not the top, and I have multiple reasons to show you why this is not the top. The first major reason is so far in Bitcoin's entire history, Bitcoin has topped out above this red line just here, as you can see here and here. And so far, Bitcoin has not gotten above this red line. And this red line, by the way, is coming in at around 59,300 US dollars, which means that we still have more upside to go. Now, if you look just here, we actually got a rejection from this red line, as you can see just here. And just going back to the 2017 bull cycle, we saw something very similar just here, as you can see. Just going back here and zooming in towards the 2017 bull cycle, as you can see, the Bitcoin price came up to this red line, and actually the first time it met that red line, it got a rejection and it had a correction. And this correction from this top down to the bottom was actually around 40%. This was one of the biggest corrections that we saw last bull cycle. And this was really the last big correction before we eventually just kept on running up towards the big all-time high at 20,000. And just going back to present day, we're seeing something very similar once again. Bitcoin's being rejected by this red line, and we could indeed see a bit more of a correction once again. I would be surprised if we see more like a 30 to 40% correction. Right now, we're sitting on around a 20% correction, so we can still see some more downside once again. But it's important that I mentioned that this is a buying opportunity. I'm not selling anything right now. Another really interesting thing that actually compares what's happening right now to that exact point in time that I just mentioned earlier is the fact that if you look just here from the last high that we got to the current high that we just got now, and if you look in the RSI, once again, this is on the weekly chart, we actually got a massive bearish divergence on the weekly chart. And so obviously this means that we're going to stop heading up in the short term, and we're either going to head sideways or to the downside over the next few weeks and maybe over the next month. And once again, just zooming out and going back to the 2017 bull cycle and back to that exact point in time that we said we were looking like we're at, going from that point in time in the 2017 bull run to the previous high, what do you know? We also saw that same bearish divergence between those two highs. As you can see, we got a high and a higher high, but in the RSI, we got a high and a lower high, exactly what we're seeing right now. And back here in 2017, Bitcoin at this top was at around 5,000 US dollars. And a lot of people thought that was going to be the all-time high forever, because once again, Bitcoin crashed around 40% from that $5,000 high, and a 40% correction from this recent high could take us down to as low as around 35 to 36,000. Now, pulling out the Fibonacci retracement tool from the last big low that we had here at around 29,000 to the recent all-time high at around 58,500, the 61.8% Fibonacci level, which is the most important Fibonacci level on the chart, is coming in at pretty much exactly 40,000 US dollars. So I just mentioned that a 40% correction would take us down to around 35K, but 40,000 once again is a massive Fibonacci level. So honestly, if we are to continue on this correction, then I would be targeting around 40,000 US dollars as our potential bottom for this correction. All right, now I've just pulled up another exclusive indicator that's only on this YouTube channel. You won't see this on any other YouTube channel. And these two moving averages just here have previously predicted every single bull market top in Bitcoin's entire history. And so because of that, I've switched it back to the daily chart just so you can see how accurate this indicator actually is. This is the first halving cycle. As you can see here, this red dotted line is the very first halving back in 2012. And just here, this was that first massive top that we saw at around $270. And how this indicator works is basically when this orange line crosses under the pink line, as you can see just here, that signifies the market top, which was right here. It was only about 3 to 4 days later that the price ended up topping out. Now, zooming out to the next major market top, which was right up here. This was in the end of 2013 at just above $1,000. And this was really like the top of the first halving cycle before we entered the next massive bear market. And just zooming in a bit closer here, as you can see, when the orange line crossed under the pink line just here was the price when that happened. And if you sold at that cross in these moving averages averages, you would have basically sold the exact top of this bull market, which is honestly insane because once again, as soon as this happened, Bitcoin entered a multi-year bear market. So obviously it would have actually made sense to sell when this happened and buy back in at the bottom of the bear market. Here we are at the big $20,000 all-time high at the end of 2017. And now when the orange line crossed under the pink line, once again, this actually predicted the top to the exact day. If you sold right when those two lines crossed just here, you would have sold the exact day the Bitcoin topped out for that bull run, right before Bitcoin entered a massive bear market throughout the entire year of 2018. So in that being said, where are these two lines right now? And as you can see, these two lines are getting pretty close to each other, but they have not crossed yet. Once again, we're extremely similar to where we were just here at this correction. Once again, I will continue to update you guys on this exclusive indicator on the channel, so make sure you're subscribed with notifications on so you're not missing any of these important updates. And just quickly switching it to the monthly chart. By the way, you can't even see this crash on the monthly chart. But anyway, on the monthly chart, this was that price top that I said is most similar to what we're seeing right now. And from this top that we saw at around $5,000 during 2017, once again, we had about another 4 months or so before Bitcoin topped out at the top of the bull market. So honestly, just judging on the trajectory of this bull cycle so far, then I would be targeting the top of this bull market for somewhere around the middle of the year, give or take. Obviously, it's extremely hard to time the top of the bull market from where we are right now. But yeah, once again, I will be targeting somewhere around the middle of 2021 for the top of this bull market. All right, now here we are on the Ethereum US dollar chart. This is on the weekly Ethereum charts to keep with the trend of the macro analysis. And this yellow line that I've mapped out on the chart just here is actually the previous all-time high for Ethereum that Ethereum reached back in the beginning of 2018 in the last massive bull run. And this correction that we're seeing right now, which by the way on the weekly chart doesn't really look that big in the grand scheme of things. But anyway, this correction right now is actually kind of important because we're actually retesting the previous all-time high for Ethereum. Honestly, it's incredibly important that Ethereum holds this level. The previous all-time high is coming in at around 1,440 US dollars. Just quickly switching it to the daily chart so we can pull out the Fibonacci retracement tool from the previous low here to the all-time high. If Ethereum breaks that previous all-time high level, the immediate support level that I will be targeting is obviously the 61.8% Fibonacci level. And this is coming in at just above 1,300 US dollars, at around 1,340 US dollars. And if we were to break below that Fibonacci level, then the next most important Fibonacci level is the 78.6% Fibonacci level, and that's currently coming in at around 1,150 US dollars. Ethereum from this recent top to where it is right now has already corrected close to 30%. Especially during a bull market, the biggest corrections for Ethereum once again are around 30 to 40%. So honestly, the biggest part of this correction is now behind us, in my opinion, just from doing my analysis. Once again, we could totally see some further downside price action, and honestly, I would be actually expecting that. And once again, these price levels at around here, where those Fibonacci levels were coming in at around 1,100 to 1,200 US dollars. Honestly, that's where I would be roughly targeting for Ethereum, towards the bottom of this correction. And once again, I'm using this as a buying opportunity to hold for the long term. I have not sold any crypto whatsoever along this correction. I'm only looking for new buys. But yeah, that's just about all I have to say for this video. Sorry for the later upload. This is a longer video and it does take longer to edit. But yeah, if you enjoyed the video, then please make sure to just leave a like on the video down below. And if you're new to the channel, make sure to subscribe with notifications turned on. Once again, I put a lot of time and effort into these videos to try and help you make money in crypto. So if you could just spend a couple seconds out of your day to click like and subscribe, it seriously means a lot to me and it helps out the channel so much. And yeah, if you have any feedback, questions, or suggestions for me, then let me know in a comment down below. I try and read and reply to every single comment on these videos. So yeah, make sure you just leave a comment down below and I'll get back to you as soon as possible. Just be careful because there can be some scammers down in the comment section. So if you see a comment down there or a reply to your comment with like a phone number, an email, or Telegram, or WhatsApp, or anything like that, please do not contact anyone from the comment section because it will most likely be a scammer. I try and delete all of those comments as they come in, but because they're always coming in, I just throw these warnings in these videos for you guys. But But yeah, once again, that's just about all I have to say for the video. I really hope you enjoyed, and I'll see you all in the next video.